When you're selecting a form of organization, one of the most important criteria is the degree of risk that you're going to have in running that business. And there are generally three forms of organization that you can choose from. You can be a sole proprietor, you can be a partnership, or you can be an incorporated entity. Other issues that may affect your decision include the amount of profit that you're likely to have. If you think you're going to have a loss, you might want to have a sole proprietorship so you can offset that income against other sources of income. The disadvantage of sole proprietorship and partnerships are that you have unlimited liability. The advantage is that you can deduct expenses that you may incur that are over and above your revenue against other forms of income. As you become more profitable, it makes more sense to have an incorporated entity because it's possible to retain income inside your corporation at much lower rates. And you can also pay out these amounts at much lower rates in the future. The ideal way to become financially free is to have an incorporated, successful small business. There are various forms of organization that a business person can choose. I had a situation recently when our client came to me and tried to decide on the form of organization. We incorporated a company where his wife was actually a shareholder in this company. The wife didn't have a pension plan, and therefore they didn't have much family income other than his IBM pension. What we were able to do was to have this fellow work, and after approximately 5 years, he had accumulated significant funds in the company, which he could then take out through a dividend strategy to his wife. And the wife wound up having, after 5 years of his working at the end of his career, a pension that was equal to his. So the form of organization was very handy in that situation because we were able to keep money in the company at a very low tax rate, less than half of what he was paying on his pension, and then keep the money in the company and distribute it to his wife so that his wife actually got a net pension after 5 years of his working that was equivalent to the pension that he had received in IBM after 30 years. That's the kind of benefit that a corporation can allow you in family income splitting when you choose an incorporation for the right reasons.